trading review. So I only took one trade well, this week, technically, I'm doing this on a Friday, but it's a review from Monday to Friday. And I only took one trade. So not a lot happened. I'm going to review that trade and then spend the other time talking about other models. So my model is the FIB model. It's direction, first thing you do. Second thing you do is wait for a confirmed retracement into a fair value gap. I just say fair value gap. And the final thing is have that fair value gap overlap with a fib. It's a measured move. That means if the move is 20 points, then the measured move also should be 20 points. That's it. So this line is 930 open. We had initial baseline, so nothing below it, no swings. Swing started from here. And this move right here, going up, is within the time frame that I set for a direction. It's not a rule, it's a variable. Think of it as a framework. A couple of things in there. One of that is time. The time frame I tend to watch price on is the 5-minute. I will drop down to the 2-minute, 3-minute, 1-minute, depending on clarity, right? Is the movement clear? So this direction happened inside that 30 to 60-minute time frame. That's one of the variables. So I can trust that move. That was just step one. You wait for the retracement into a fair value gap, and the fair value gap is the 5 minutes. I don't use any other fair value gaps apart from the 5 minutes for this model. The model doesn't say it has to be the 5 minutes. This is just because experience has told me from trading ES, use the 5 minutes. And then we simply target a measured move. And that was it. It was a one-to-one trade. Just one trade. I had to take the trade above this gray box, which is a 5-minute smart money reversal, because it can prevent price from rising. Okay, it can do that. So that was it. Not a huge amount of excitement. Just one trade. So let me talk about other things. So I have other models that I've gained through experience. And as experienced traders, we bring baggage. I moved from swing trading to day trading. And all the baggage I had from swing trading, I just brought along with me. It doesn't help my model. In fact, it confuses the model. So my model right now is mainly used in session. So New York Open AM. It can be used for different sessions, or micro sessions, Asia, London. It can be used across sessions, and it can be used for higher time frames. But I'm using it specifically for day trading and for prop trading. Okay, so not primarily for swing trading, although it's still part of it. I'm not going to explain that now, but let's go to the higher time frame view. So I teased in one of my videos that overall for ES, I'm bearish. And I'm going to show you why I'm bearish. Right now, you're looking at ES. This is weekly. It's in a strong uptrend, but there's something here that caught my eye right here. This right here is end of a rising market. So if I, 1 second, if I hover over this, that's the end of a rising market. That candle needs to be resolved. What that means is price has to move away from it to signal, right, that this has no hold on me, or it needs to execute, right? It needs to deliver. We are chopping below and above this end of a rising market. This is the strongest signal you would ever see on VSA. It's the strongest. Bag holding is not as strong as this. This is number one. So, and this doesn't appear because you need data to your, there shouldn't be any data to your left. There's no data to your left. This is a strong signal. So that's the reason why I said overall I'm bearish, because we haven't been able to move away from that bearish. It's a very bearish principle. I say signal, but it's not a signal, it's a principle, because other things have to make sense in the background. So what are the things that make sense in the background? Let's look at my scanner. I don't know if you can see this. Try and make this as small as possible, I think. All right. This is all the time frames that I monitor. We have a strong weekly bullish trend. That's just the trend, not price, trend. But see what's happening to the daily. It's disappearing. It was bullish, now it's mixed. The 4 hour was bullish, now it's mixed. So the two major time frames that should align with the weekly are mixed. And the only time that happens is when manipulation is happening in the background. So they'll keep pushing prices up and down, up and down, up and down. Why? Because they're trying to sell and trick you into buying. That's why it keeps going up and down, up and down. You can see the signal right here, or the principle right here, end of a rising market. When this appeared, the daily started to go mixed, 4 hours started to go mixed. That's the trend. Now, another thing I look at is price. So this is slightly different to my fib model. So for swing trading, I use a BLAST model. I call it BLAST framework, which is understanding the background, understanding your levels. So that's B, L. A is your action zones. S is your setup, and then T is for your trade management, right? The background is very important because it's where you try and identify footprints using volume. So are professionals, are they active in the market? Well, you can tell from the volume. Ultra high volume equals lots of activity. It doesn't tell you if it's people selling. It does not tell you if it's people buying. But when you have ultra high volume in the market, that tells you there's a lot of activity. And if there's a lot of activity and price is not, so price itself is not moving either way, does that make any sense? So volumes are spiking, but price is not doing anything. The reverse is also true, but in this case, let's talk about ultra high volume. So something's not quite making sense. This is either going to explode to the upside or it's a trap. But fundamentally, this is why I say I am bearish until we can break clear. So that means the range of the bar doesn't in any way interact with this end of horizon market. So if I put a line there, we need to be completely away from it. That gives me a little bit of confidence that, all right, we may be resuming the higher time frame trend, right? Because the trend is up and price is up. You can see that on the weekly and also on the monthly, they are correlating. Let's go to the monthly. Okay, let's go to the monthly. Might take some time to load. But when price and trend are correlating, I'm confident. But sometimes that doesn't happen. So you have the trend is going one way, price is going in a completely different direction. And that happens when price moves too quickly with the trend. But then one of two things will happen. Either price comes down to catch up, to meet the trend as it's going up, or the trend starts to turn and pulls price down. At the moment, we're okay. Because I'm recording this okay, there we go. It takes a little bit of time. So this is the final thing. You can see trend on the monthly up. That's good. Price is up, but look at where price is. Look at where price is. It's too far away from the trend. They should correlate very closely. When that happens, there is always a risk, like you can see here, of price running. It's still on an uptrend, but it will cause a lot of damage coming down to interact with that trend line. So think of it as a short-term correction. But that short-term correction is a lot of headache for a lot of people. It's quite short, it's quite quick. Look at it, just one quarter, bang, and then it just resumed the uptrend. So just one quarter. So that's it for the weekly review. Hopefully this was informative in some way. Next video is Monday.